Ladies and gentlemen, it's very easy to talk about the true psychology behind successful trading. The truth is, many people use a lot of words which mean something to somebody else. Two girls pretending to kiss each other on the cheek because they have a face full of makeup on and saying, "Oh, I love you," is much differently than a mother looking at her child saying, "I love you." The same thing applies to Wall Street, ladies and gentlemen, where certain words are very interchangeable and used by many people. However, these words do indeed have definitions that are different and understood differently than others. However, when people hear the words, that usually triggers a definition that is particular to an individual. For example, the word consistency. When it comes to trading, consistency can have many definitions. A trader who makes money every single year can call themselves consistent. However, one does know it's easier to make money every year as opposed to every single month. And a trader might consider themselves consistent if they can make money every single month. But we also know it's harder to make money every single week. And a trader who makes money every single week has a different definition of consistency than a trader who makes money every single month. And of course, if you want to go down further, a trader who makes money every single day has a different definition of consistency to a trader that makes money every single week. And we're going to highlight those differences. We're going to highlight what it should truly mean, and we're going to highlight the psychological damages which can indeed be caused by different definitions and by different understandings of what all these Wall Street terms mean. Ladies and gentlemen, we're going to talk about the true psychology behind trading. I am Mark Melnick, and this is the Newsbeat Show. So we have a little bit of an interesting agenda for here for you guys tonight. We're going to talk about these 11 things. Very common questions, nothing special. Don't you'll find these questions anywhere on the internet, and it's a very important thing to talk about. We're going to start with the first one here: to remain mentally and emotionally focused while trading. And this one is a real good one, and this is what Wall Street doesn't like to talk about. What Wall Street really likes to do is they like to put you in a container. They like to say, all right, you're a day trader, you're a swing trader, you're this trader, and they drop you in a bucket and hope for the best and hope that you'll be able to somehow climb yourself out, and they will show you very pretty things behind people in expensive vehicles or expensive houses or expensive views or things that cost a lot of money or at least perceived to cost a lot of money. And they'll flash that in front of you to give justification to what the person is doing. When it comes to remaining mentally and emotionally focused while trading, um, for me personally, it's what's going on in your life around you. One of the things that I even discuss among traders and members of the Newsbeat live room is to remain mentally and emotionally focused while trading. And how do you do that? It's very easy. It sounds right. If I tell you, you got to remain emotionally focused while trading, it's like, thank you, Captain Obvious. I am now informed and ready to go. It's not going to really help you a lot. What's going to really help you is if you can actually do things that can be conducive for that. For example, your brain needs a lot of sleep. Simple things like detoxing. Sometimes your brain could shrink as much as 30 to 50% when you sleep. People don't realize your brain actually detoxes itself when you get actually a good sleep cycle. You want to know what affects that sleep cycle? Several things. So we recommend products. We recommend, for example, putting your phone in airplane mode because a high, strong Wi-Fi signal is electromagnetic radiation, of course, and that sort of thing prevents you from actually detoxing your brain. So it's very important to actually turn off your Wi-Fi or go into airplane mode, or even if you can, turn off your router, especially if you live in a building and you can't stop every connection. There's also what you eat. Eating carbs, eating bread the day before trading is a huge no-no. Your diet matters a lot. Look at Scott Redler. He's an extremely large athlete when it comes to doing athletic activities. He can, that's very important for your brain. It's very important for your blood flow. It's very important for your system. But some people are lazy. Some people aren't going to the gym every single day. These are the things that you could do to remain mentally and emotionally focused. And while you don't think it matters, I will tell you the members of the Newsbeat live room are the most consistent traders on the planet, bar none. The truth is, the way I judge consistency is on a daily basis. Traders here almost lose never once they hit that level of consistency. To have 0 losing days in a month, 0 losing days in 2 or 3 or 4 months is very common, without blowing up, of course, on that one day that you do lose. It's called intelligent trading, and it's called the right trading, and it's called not getting sucked into the system. Because the truth is, if all these Wall Street slogans and logos like cut your losers short and let your winners ride and bulls make money, bears make money, and pigs get slaughtered, if all these things were useful, 98% of traders on Wall Street who approach this business would not fail, yet they do. So maybe it's time to think just a little bit outside the box. Which brings me to my next one. Step 2 over here, that losses are part of all systems. Knowing when to take losses is important. While nobody can really disagree that losses are part of all systems, I do disagree with the point that traders should be taking losses in terms of on a daily basis. So when I'm talking consistency, I'm not even, I could cut it down further and talk about a per trade basis as opposed to a daily basis. But on a daily basis, it's easier for a trader to weather losses. If the trader walks away with a nice 4, 5, 3, 2-figure day, 6-figure day, depending on where they are as a trader, they'll be happy even if they took losses throughout the day. What Wall Street doesn't like to talk about is even if you make money, there's a wrong way to make money. Losses are part of all systems, but ladies and gentlemen, I have not found any way to take very small losses and very large wins while batting 80% or higher, 70% or higher. In fact, that's why every system you'll see in education puts you in the 43-57 paradigm. If you don't believe me, you could just simply look at your own results and actually do the homework and the painstaking truth of what your trading results are actually doing. The 43-57 paradigm is that every single system created on Wall Street, here, there, everywhere, basically puts traders, for the most part, as a very accurate, broad generalization, in the 43-57 paradigm, meaning you're winning 43 to 57% of the time. And the whole point is that you're praying that you can make more. So while losses are part of all systems, I will come out and I will put out a bold statement right now. I think taking stop losses is the worst thing in the world. You see, it's kind of funny. You almost make a mental agreement when you're taking a trade that, okay, I'm risking X, but I'll make 2X. And the 2-to-1 risk reward scam and the 3-to-1 risk reward scam, 4-to-1, 5-to-1, 10-to-1, it's all a scam because the truth is 98% of traders are still failing. So you have to ask, why are these traders failing? You see, gurus in the industry, they don't like to approach this. It's a very unsexy topic. If you asked anybody to actually show you the numbers of their retention rate, you would realize that 98% of traders are failing. And the ones that are even making it can't even pay their bills sometimes because they're just barely ahead. So if losses are part of all systems, what happens when you get stopped out? And as I say, I don't really remember the last time I got stopped out on a full position, maybe a runner that I would have made money on no matter what, and I make money. I get stopped out practically never. I cannot remember the last time I took a stop out for a loss. And there's a reason for it. The truth is, when you take a trade, most people are underneath the fallacy that you have to take a 2-to-1 or a 3-to-1 risk reward, or 4-to-1 or even potentially better. And then they tell you, well, if you make money half the time, they start laying out a trading plan, which is also a lie and a fallacy, trying to show you that if you actually follow the plan and you risk, for example, $1,000 and you're batting, for example, 50% of the time, and they could show you a very nice graph and they could prove it to you mathematically. Numbers don't lie. But the whole system and the psychology behind it is a lie. Your brain is not going to be able to withstand all these losses over and over and over again. So what they like to do, for example, is right over here, they'll take a situation like this and they'll say, well, you're risking $1,000 per trade, for example. You're doing a 2-to-1 risk reward ratio. And the whole goal is to just keep taking hundreds and hundreds of trades because in the end, if you keep flipping a coin, and if it hits heads, you win 2, and if it hits tails, you lose 1, you're going to just practically print infinite money, especially if you're batting 50%. And then they'll show you the numbers like you took 10 trades, for example, and 5 trades netted you $10,000. And the other 5 trades, because you made 2 to 1, right? Right. And the other 5 trades, you got stopped out and you lost $5,000. And then they'll stop and they'll look at these numbers and then they'll say you netted $5,000, and you'll probably have some schmucky looking person with a smile on their face looking at you, showing you what a good job that is, and showing you, and basically showing you a system in which you can explain to your loved one or parents or people who care about you or friends and explain to you why this is a good system. But what people don't talk about is the psychology behind risk reward. All the Harvard studies, all the scientific studies on psychology out there saying that generally in life, you need to have 7 good situations. Nobody could stop every bad situation in life. You're going to need at least 7 good situations for every 3 bad situations. So if you are even doing this well, if you are even making money like this well, and let's say you're actually one of the 1%, or maybe in certain environments 2% of people who could pull what I'm showing you right now off, where you're basically batting 50-50, you're making 1,000, you're betting 1,000, you're making 2,000 when you win, 1,000 when you lose. Let's say you're one of those people. What's going to happen is you're going to build up so much psychological toxicity in your brain that you're going to be unable to continue it. That's why most traders who do this system, even if they do run into a small streak where they get lucky and do well, they'll just start blowing out one month and blowing out the next month, and they'll lose all their confidence because they're building psychological toxicity. The system doesn't really work on a 50% basis, and they're going to fail. However, from the guru standpoint, you already paid me your money. Have a good day. Hope you do well. If you didn't, next, and we'll just literally be like the revolving door, and it's the marketing dollars go inside the revolving door, which makes it spin, and there's a line coming in and there's an equal line coming out approximately. You try to retain 1, 2, 3, 4, 5, 6% of the people. You try to retain it. Even if 98% lose, people lose. Maybe they see a glimpse of something that can help them, or they see the guru, for example, putting themselves out there to try to get people to that next level, and they'll be able to succeed. I am telling you right now, this is all a lie. We are by far the most consistent room on Wall Street. So I did something which I think the I think the scientific word for it is ballsy. I'm not sure. I'm not sure what the non-scientific terms for it is. Uh, I did something kind of ballsy in my room. I don't know the other term for it, so do excuse me. And I literally came to my room, and I want to see if you agree with me that this is ballsy. I literally came to my room and I said, "Are you finding tremendous P&L consistency with my plays?" And keep in mind, when I asked this, we're the largest room here at T3. I asked a question. I'd love to see other gurus ask this question. Are you fine? Not today, not on one given day, not let's grab the testimonials today and watch them bounce tomorrow. Not one of those. Are you finding tremendous P&L consistency with my plays? I've been doing this 13 years. The truth is, for the majority of these years, I failed people. The truth is, everybody around me, here, there, everywhere on Wall Street, are still failing the majority of people because they're unwilling to change. Just because something works for person A does not mean they're going to be able to teach it and implement it and show the psychology behind it and even life situation that would befit person or trader B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. But I did ask that question. If you had to guess right now, what percentage of those people said they were finding consistency with my plays? What would you guess? We're not talking on a given day. I'm saying overall, are you finding not P&L consistency, tremendous P&L consistency with my plays? What do you think they would say? What percentage of the largest room here in T3 Live, which is, I don't know, we have like 3 traders in our room, figure the largest room. But all kidding aside, how many people do you think would say that? How many people do you think would say that they're finding tremendous P&L consistency in my place? You want to know what not one other room can get remotely close to? 75%. And a lot of the people who voted no, may I add, were in my room for less than 2 weeks. And they weren't there yet. 75%. So please, please, I implore you to just consider that what you were taught is a lie. For most people, maybe you are the one gifted person out there. Maybe you are that one good trader in the service like this works for me. But how about everyone else? I make money consistently. I make money consistently. My P&L will blow the panties off. Ta-da! And I am not even the highest P&L person in my room. I don't even think I'm top. I'm definitely top 100. I don't think I'm maybe top 50. I mean, we have some real players here, but it doesn't matter what I make. It matters what you make. This is all about you, not me, right? So if the losses are all part of systems, here is the truth. Here is the truth. If you want to be consistent, yes, I know you can risk 10 cents and make $1, and that's 10 to 1 and be like, oh, I do that all the time. But no, you're not winning all the time. Are you making money every single day? How many losing days do you have in the past month? 2 months, 3 months, 4 months. How many losing days? Not trades, not weeks, not months, days. Okay, that's a good question to ask. I try to keep my number as close to zero as possible, just to give you an idea of what my definition is. And not only that, F me, forget about, which means forget about me. Look at the other people around me that I fight every day to get to that level. So yes, while losses are part of all systems, getting stopped out is a stupid way to trade. I'm not saying you should don't take me out of context. I'm not saying you should sit there and hold your losers forever. I'm not saying that you should sit there and blow out a bunch of times. I'm saying you're sitting there swinging, you're going to feel the big ups and the big downs. Most traders can't handle that. Most traders need very small losses and in return, slightly bigger wins, which are also small comparatively to stock or option size. Number 3 is always try to be extremely disciplined and exit your losing trade when your system requires you to do so. The problem with the faulty 2-to-1 risk reward system is that they get into this mental contract with you where you're saying, okay, I'm willing to lose the $500. I'm willing to lose the $1,000. I'm willing to lose the $100, the $2,000, whatever your risk is, you're willing to lose that. Let's even say $500. You're willing to lose it to make 1,000. And that also is also a psychological play. People who do that are actually playing a psychological trick on you because you're risking 3 figures to make 4. And that always sounds better. Risking 1,000 to make 2,000 isn't as a psychologically powerful message as risking 500 to make 1,000 or risking $50 to make 100 for that matter as well. So when you actually do this and you accept it, you're going to feel horrible. How many of you traders, have losing days and it's hard to crawl out of bed. You have to look at your account. You get to the point where you get so flustered that you decide to size up and you either pray, get lucky, try to make back some of your losses, or you blow out your account. And that's a very common story. How do you be extremely disciplined? I'll tell you how. You have to find the strategy and methodology that just simply makes you money as soon as you enter. In English, as soon as you enter a trade, you should be up money immediately. Nobody talks about that. Nobody talks about the psychological damage of a trade when you're actually in it. You buy a stock at $50 and you have a stop at $48 and you have a take profit at 54, for example. So let's just even go over it just so you can see it. Buy XYZ at $50. Your stop loss, which is a terrible word, to me it's a curse word. The F word isn't as bad. You have a take profit, another scam term, of $54. Stop loss and take profit are both scam terms because what they do is they psychologically pigeonhole you to hold no matter what until one of these two things happen. As soon as you buy at XYZ at 50, you are taught that you need to sit there and either hold it till $48 hits or $54 hits. And that's what you are taught. But let me ask you something. How are you feeling when the stock's at $49 and you bought it at 50? How are you feeling when you're down a point? Are you sitting there like confident? Are you about to do something stupid and double in? Are you just completely relaxed? I already mentally accepted that I'm risking to 48. I'm just going to go like this and I'm just going to watch my trade. If your monitor had eyes, this is what you would look like on the other side. While your stock's at $49 after you bought it at 50. And you're feeling awful. You're psychologically toxic. Now let's take the flip side scenario because that's only fair. Let's say your stock goes, instead of down $1, to 51, but you have to hold it to 54, right? When do you start trimming? What if the market starts pulling in? Are you supposed to exit your entire position regardless if you're up or down? Does the stock owe you something at that point? How do you feel if you bought a stock at 50, it goes to $51, and then it pulls down to $50.25? And now you just gave back 3/4 of your profit. Does that make you feel good? Trading is not supposed to make you feel horrible. Trading is not supposed to be a painful game. Trading is supposed to be fun, exciting, and very, very powerful. You are supposed to make money practically every single day. And unless you are doing that, I promise you, from a psychological standpoint, you are in the process of self destructing. And it is not your fault because you have been taught faulty psychological systems by people who have no business showing you what to do. Just because LeBron James can spin in the air and dunk on somebody's face while drinking a Pepsi in the other hand doesn't mean that you can too, and doesn't mean that you should even be trying to. The truth is, every trader needs to do what they do best. It's not about me creating, 100 different strategies, packing you together a $2,000 course and shoving it down your throat, telling you to like it. I want you to like this course that you paid for. And then you'll come out and you'll be like, after the course is done, then they'll take your testimonial. How did you feel about the course? It was great. I learned this. Okay, time to trade now. Oh, I blew out my account. Like, how does that work? I'll tell you who it worked for, the people who sold you that scam. I mean, education. It's not their fault, it's your fault. You're the one who pressed the keys. You're the one who failed. You need help? We could have some private lessons over here. You could put in more money if you really learn something, just as long as it's on you. But what did Wall Street not tell you there? Maybe, just maybe, they were psychologically destroying you from the onset. They were mentally destroying you since day one. And they didn't, maybe, I'm not even saying it came from a bad place. Maybe they're the person you want to invite over to a pizza party with. Invite your boyfriend over. We're going to have a lovely time. Their party favors off to the side. Would you like some Coke? Coca-Cola? Trading is not supposed to be difficult. Traders make it difficult. Traders punish themselves. How do you feel if you bought this stock at $50, sold it at 51, and you watched it go to your take profit target of 54? Take profit? You mean the stock was supposed to just keep running up? That's really helpful if you could predict the market going up, but we're a week away from election, so how many people were struggling in between today and the last 3 weeks? Trading changes, trading evolves. The same stupid strategies that you were doing before, whether they worked or not, are possibly not working anymore. Who would have thought? If I asked how many of you believe that the market evolves, every single one of you would raise your hand. If I asked every single one of you, what percentage of trading is psychology? Let me know in the comment section. Most of you are going to give a number between 70 and 100%. Most of you. If I asked you right now, what percentage of trading is psychology? Yet, we're focused on the stupid strategy. We're focused on a faulty, psychologically devastating system. Yet trading is all psychology, and the market's always changing, and we always need a new strategy. How stupid are we now? You tell me. How stupid do we feel now? We just agreed that, Mark, the trading is mostly psychological. Most traders say 70 to 100%. Type in your number. If you say any other thing, I promise you, you are the minority vote. You are the minority vote. How many of you guys think the market is evolving and changing? Most of you will say yes. So if the market's evolving and changing, yet I'm still using the same static BS, if the market is mostly psychology, why am I doing trades that are psychologically damaging to me? And I can tell you, because you were taught that way. Us gurus on Wall Street, are guilty. It's your responsibility. It's 100% on you, but we're guilty for misleading you. We're guilty for destroying you. We are a huge part. Nothing's 100%. Legally, we're not responsible, but we are a huge part of your failure. We have let you down as a whole. Every guru. Every guru. We have let you down as a whole. Strategies have to be psychologically solvent. They have to be statistically viable in the current trading environment, and they have to keep changing. So because strategies keep changing, there's always a new education course. See how good that is for business on our end? Not taking losses when indicated is dangerous. And this is another interesting thing. A lot of times people get scammed into the climax trades. I mean, I think last time I've heard the word climax is when I was like 13 watching a movie I shouldn't have, is the last time. But however, traders do like to use the word climatic, climax trades, overshoots, which probably sounds just as dirty, but let's just go into it. And this is what generally is happening here, ladies and gentlemen. Just so you can see, I have to show you. You'll get, for example, a bar like this and a bar like this, and let's say the volume is increasing. And then what they will teach you is they'll say, you got to short somewhere around here, you know, your stop loss, your stop loss is going to be here, and maybe, just maybe, you can ride this down somewhat and make money. And the same thing goes vice versa. If you get the big red bars, you go long versus the day low. But you want to know what's funny? This is a very big reason why people blow out. And the reason is, let's say, for example, they short right here. Let's say you go ahead and you successfully short right here. And let's say the stock has another leg up for whatever reason. What do you think happens 99% of the time? Do you think traders just cover their position for a loss? The vast majority of the time, traders will double in at that point. So they're literally strategies which cause traders to break their own rules. Even though they'll tell you don't do something, you're going to end up doing it anyway. Imagine I told you your rule is to cross the street and never jump. And then all of a sudden, you cross the street and there's cars going 150 miles an hour whizzing by and you're jumping to avoid them. And then after you jump out of the way, I tell you you screwed up. How funny is that? I want you to live a good life. I just don't want you to breathe in the process. So strategies like this where people talk about climax trades, and this is what most, and we could do the reverse with the red bars. This is what single-handedly will cause traders. I mean, there are other things as well, but this situation will single-handedly cause somebody to double down and blow out. A lot of times they'll make money. They can make money 75, 80% of the time on a stupid, I mean, instructed strategy like this. But what happens is not every trader, some will, I'm generalizing, not every trader is going to put in their stop quick enough. If they short here and it explodes up, most traders are going to see a red P&L. They're going to get flustered, and most of them are going to double down. And you better pray it goes down then, because you might be on your way. This might be that day in which you are about to blow out your weeks or months of hard work in one day. And you know what? It's a strategy taught to you by morons who have no business teaching others on Wall Street, because they don't understand the psychology behind what they're doing. Maybe they're good persons and people. Maybe really nice woman. What a sweetheart. She even has a kid and a little puppy who has little puppy dog eyes. But she teaches you a strategy like this. She just destroyed you as a trader. Don't worry, when you lose money and you ask her to fund your account, I'm sure she's going to send you a check the next day. Next thing. Riding losing trades for too long usually results in large losses and risk of ruin increases. Risk of ruin is exactly what I was just talking about right now, where you just basically take a huge percentage loss of your account. You're usually disciplined. You usually do the right thing. But all of a sudden, You did the wrong thing. You doubled in. You got toxic. You tried to make the money back, and that's the day you blew up. And you know what? What will Wall Street tell you? What will imbeciles like us come to you and say? It's your fault. I told you not to double down. I told you to have a stop loss in which you agree to on every single one of your trades, right? Didn't I ask you that? Didn't I ask you that? But then I stop and I look, ladies and gentlemen, at the people who are blowing up like this. And you know what I realize? They're doctors, they're lawyers, Navy SEALs, engineers, police officers, firemen, nurses. Are you telling me that that dude who was in the Marine Corps, God bless him for doing what he does for our country? You're telling me that guy isn't disciplined? That's the dude who wakes up 4:30 in the morning, goes for a 3-hour jog, has 3% body fat, which is 2% higher than Scott Redler's, and abides by life perfectly. You're telling me that dude doesn't have discipline and broke the rules? Or maybe you keep poisoning somebody and poisoning somebody and poisoning somebody and poisoning somebody until they trip over their own feet. And then you stop and you look at them and tell them they screwed up. The strategies that you are doing may be psychologically toxic for you, ladies and gentlemen, and they will be the end of you. So if you're sitting there, you want to know what I believe in this environment, what works best? Cutting your losers short and cutting your winners short. That's what works in the current environment. Consistently, again, Newsbeat Live members, I'll show you strategies for free if you're a member of this room, by the way, and there's a link in the description if you want to join. I will show you ways to produce true consistency with real number. We're talking we have 7-figure traders, like real like millionaires. We're talking people making hundreds of thousands. We're talking real money, not like oh look, no, real consistency, smaller losses, larger wins, way fewer down days, to the point where they can potentially come almost non-existent. You want to know how many people fail in other services? You round up to the nearest 5%, you get 100%. You want to know how many days you can have consistently trading in a month? You round up to the nearest 5%, you can have almost 100% consistency on a daily basis in every environment if you're doing the right thing. That's what, not a surprise. You see, I'm the director of trading psychology here. Ironically, people say that trading psychology is the number one key to being a successful trader. Now, that, ladies and gentlemen, is how people should be educated. It's not a good idea to keep changing stops to avoid a loss. It's not a good idea to have a stop loss in the first place that gets hit. No, I'm not saying you should be undisciplined and just let your losers ride. Don't take me out of context. If I say the sky is not purple, doesn't mean I'm saying it's orange or green or pink, you beautiful unicorn, you. What I am saying is people cannot handle a stop in which they agree to on a psychological basis before. If you buy a stock at $50 and you're risking 25 cents at 49.75, what I'm saying is most traders are not going to be able to psychologically handle that. You'll handle it. You'll hit the stop loss, your P&L will go red, and your day will go on and you'll be alive. And you'll be a little more of a jerk to your girlfriend, your boyfriend, your wife, your husband, your neighbor, your kids, your pets, God forbid, because we all know pets are better than people. Like you might not be a nicer person. One of the funniest things about my service here, our service, our family here at T3 Live, is you know what? People tell me all the time, and I have, I don't know, 1,000 emails. People tell me that their loved ones notice that they change their personality. They're nicer, they're more calm, they have a better relationship. You know how many people say that I saved them from getting divorced and that I saved their entire families by showing them this methodology? Ladies and gentlemen, trading is not about what strategy you use. Trading is about how you treat you. And I'm not saying you have to go to the gym. And I'm not saying that you have to do all these crazy things, but the more you do And we show you exactly what these things are. The more that you do to better yourself, the more you're going to better yourself as a trader. And yes, that will change your results. System traders use stops consistently. Inconsistent traders use stops consistently. Inconsistent traders use stops consistently. Inconsistent traders have take profit targets. As a generalization, yes, I know there's those one or two. I know there's He-Man in the corner over there. I know that there's this person over there. I know there's Superman over there that can do it. As a general, let's talk 98% of the people or more, right? Let's generalize to us humanoids out there, okay? Traders who use stops consistently will lose money consistently. How's that? Because you'll be stuck in the 4357 paradigm. You're going to psychologically destroy yourself before you have a chance to make money. And then they come to this room and we have to begin the healing process here. And we take you through the healing process like nowhere else. We spend a lot of private time with you guys. By a lot, I mean, I don't know. I do videos with you guys about 7 days a week. There are only 7 days in a week. I wish there were more hours in a day, but I need to ask He-Man to stop the rotation of the earth so we may have more hours in a day. But until then, if you use stops consistently, you are going to lose money consistently. And that's a fact. That's commonality. 98% of traders lose. It's not an opinion. Separate yourself as a trader from yourself as a person. That's another thing they tell you. Wrong. Lie. You cannot separate yourself as a trader from yourself as a person. It's impossible. It's impossible. You cannot separate yourself as a trader from yourself as a person. You ever hear this? You ever hear somebody say, "Show me your friends and I'll show you who you are"? Yeah, I know that cannot be true at times and whatever, but it's a saying that people say. You cannot separate yourself as a trader from yourself as a person. You cannot turn into a robot. Anybody who calls you a robot, anybody you call a machine, run away from that person. Anybody they call that, anybody they say, "Oh yeah, he's a robot. He's a machine. He's Superman. She's Superwoman." Run away from that person because you don't if you're trying to follow somebody who has superpowers, you're not going to get to where you need to go. The truth is, every trader is unique, has an individual situation, and needs unique ways to figure out who they are and how to get to the next level. And anything other than that is Wall Street lying to you. Why? Because it's easy and it's more convincing if I'm willing to take you and say, you're trader A, you're trader B, you're trader C, you're trader D, and just throw you in a bucket and then give you strategies for A, B, C, and D. Well, everyone has personal problems. So, what I do here to fix that is I help traders discover who they are based on their own results. I can take your losses and I could show you the value of them. You ever see these battle hardened warriors from like 300 who form the perfect phalanx and they have the spears and they thrust and they always hit their mark? What's common about all of them? They all have scars all over their body because they got hit, they got hurt, and that's how they learn. I could take those losses of you, show you the battle scars you have suffered, and show you the way to get to that next level. The truth is, you are an individual, you are unique, and there is a unique way for you as an individual to trade. And anybody who is like, get with my system and I'll flash you a P&L, again, real panty dropper, but it's not going to help you. No system can trade the markets without taking losses at times, is the next one. Yes, Captain Obvious, I am aware that no system has a 100% hit rate. Thank you. Thank you. The next one, clumping can happen on the losing side as well as the winning side. Well, That really goes back to the point of the 50-50 and why it really fails, because traders who are sitting there trying to make money half the time, they can run into a string of a lot of losses. And the truth is, people who say that they try to make money half the time really are making money probably closer to 40% of the time. But that's another story. The truth is, you need to win almost always on a daily basis. You need to win almost every day. Otherwise, you're never going to be a healthy trader inside your head. And I know what I am doing here in the Newsbeat live service is I am proving every Wall Street adage wrong. Because what I've realized is if this fails 98% of traders, why not try the exact opposite? And what I have realized in my 21 years of trading and my 13 years of being a so-called guru is that this actually remains very true, is to do the opposite of what Wall Street tells you, ironically. Your ability to take losses quickly is a great asset to your trading. This is 100% true. You see, the funny thing about stop losses is most people have it based numerically, when the truth is, from a psychological vantage point, stop losses should be based chronologically, based on time, not price. The truth is, sitting there and looking at a losing position for 5 hours is going to cause a lot more psychological toxicity, regardless of the amount, up to a certain point, of course, unless you're blowing up to a certain amount, as opposed to 5 seconds of looking at a red or negative position. The truth is, traders cannot handle sitting there and looking at losing trades all day. Looking at a red P&L in your face is going to damage you. It is going to make you break your rules. As they say, when they torture people and wherever they torture people, that they break eventually. What you're doing with your methodology, trying this stop loss here and take profit here, yeah, you'll have some good memories from maybe a string of days that it worked. Overall, it's destroying you and you'll never get to where you need to go. If you're like the vast, 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 almost 100% majority of traders on the planet. So I just wanted to enlighten you. Maybe it's not you. Maybe it's what Wall Street has shown you, and maybe there is an answer. There are traders that are making money almost every single day. There are traders that have started trading with a very low balance and have gotten to six figures. And it's a real commonality here in the Newsbeat live room because you know what? After years of failing people, I was not always perfect. I've learned to get to where I am today by failing people, by letting people down, by broadcasting bad. And it's not because I have a bad bone in my body. Some people do. It's not because I have a bad bone in my body. It's because I just did not know any better. And you know what? After all this time, it finally sunk in my head and I know better. And not only do I know better just for myself, it's one thing when a guru can make money. It's another thing when the people around you are making money. So ask your guru today. Go to them. Ask them to run a poll. Ask them to run a poll and ask them to word it exactly the way I am doing it. If you want your jaw to drop to the floor and watch your jaw literally snap in half, ask your guru to ask the room, are you finding tremendous P&L consistency with my plays? Ask them to ask this exact question. And I will be surprised if you see a number over 12% on any given good day. Most likely, it will be a lot less. But ask your guru today to actually ask that question. Ask your guru today to actually show you the retention rate of their service. But that's a taboo, right? That's a taboo, right? That's something they can't do. It's irrelevant, they'll tell you. There's no time for that nonsense. It doesn't matter. When in fact, it is probably your best gauge to know if you will be successful or not. So the truth is, ladies and gentlemen, it's your money at the end of the day. You can decide to do whatever you want with it. You might try to garner value from something where there is none. Maybe you paid money to be able to squeeze a rock for a year and no water and no juice is coming out of it. Right now, is the best time to be a Newsbeat Live member because right now we are changing the lives of traders like no other service on the planet. If nothing less, I do hope you guys enjoyed this. This is the first public Newsbeat show. I've been doing them private in my room for a while now. This is the first public Newsbeat show that I did in a while. It shows 642. Let me know what you think. Maybe you like these shows, maybe you don't. Maybe I'll do more. Maybe I won't, but we will see. But nonetheless, if you did watch, I hope you guys enjoyed it. Happy trading, make money, and I'll see you guys next time on the Newsbeat live trading broadcast.